Hey traders, it's Danielle. Welcome to this week's edition of Simpler Playbook. So this week we have one of our most special members of our team, Carolyn, out on vacation. So I thought I would take the opportunity to send this video to Fib Queen members as well as Simpler Options members as well as Simpler Foundation members. So what you're getting today is our regular edition of Simpler Playbook, which is my weekly analysis as well as a couple picks for the week. So let's go ahead and get started. So first of all, this week in the markets, wow, it was a little bit crazy, right? We had over the weekend news that came in the form of G20. So President Trump came out on Twitter. He said that him and President Xi from China had come to some sort of truce as far as the trade war is concerned, and that sent the market higher on Sunday evening when the futures market opened. Now, what happened immediately thereafter was the market traded directly into overhead resistance, a 618 resistance level in the S&P futures, and fell. That was a very significant area of resistance, and the market was not able to trade through it. Personally, for me, I've been looking for two catalysts for the market to potentially push through overhead resistance and correct the downtrend that we're in. And those two catalysts were, number one, the Fed declining to raise rates, and number two, a possible truce with China. Now, those two things happened, but those catalysts were not enough to send the market through overhead resistance, and we are still in a downtrend. After that, what happened the rest of the week? Well, financials got hammered, tech got hammered. We have a situation where both the S&P and the Dow have given back any gains on the year and are now negative on the year, and the Nasdaq is barely holding on to those gains. So what does that mean for us as traders? Well, first of all, I like to follow the trend, and the overall trend is down. So I'm looking for the weakest sectors to short those weakest links. What are those? Well, personally, I think the communication sector, XLC, has a couple of good options, primarily Facebook and Netflix. Now, those are two Fibonacci setups I did send out to Fib Queen as well as SO members this week, and we've been trading those in the trading room. I like those continually to the downside. Google's another one that I still like to the downside. What about to the upside? Well, here's the thing. Here at Simpler, we like to trade a combination of fib setups, squeezes. Me in particular, I love the 5-star, which is going to be a combination of the trend, the squeeze, and Fibonacci with some fundamental backing. So what do I like here? Well, first of all, in a downtrending market, you need to be very careful about buying anything. If you want to buy something, you need to, one, buy something with relative strength, which means that it's performing better than the overall market, or two, you need to stick with only the sectors that are still outperforming the market. So what are some examples of that? Well, last week in our Simpler Playbook video, we talked about Tesla being a honey badger. Why is it a honey badger? Well, it has relative strength. So this week, Tesla did trade up into just about the 380 level, right where we had the voodoo line that enabled us to take profits off of our trades mentioned from last week in the Playbook edition. John, Henry, and I all really liked that trade. And at this point, we do still like Tesla higher off of the monthly squeeze, but the shorter term trade has met its targets. The other trade that I talked about in last week's video was Dunkin'. I do still like Dunkin' to the long side. The weekly squeeze is still consolidating, and you just gotta wait. When you have a squeeze, you don't know how long it's gonna take before it actually fires off until we see the trigger. And as far as Dunkin' goes, I still like it to the long side. So those were two relative strength players. Now, what about the second option? Talking about the sectors that are still outperforming the market. Well, I personally like the consumer staples sector as well as healthcare. So for this week's video, the two different trades that I'm going to talk about are going to be Johnson & Johnson, which is a part of the healthcare sector, and then Coca-Cola, which is a part of the consumer staples sector. So let's go ahead and switch over to the charts portion. And just remember, in this market environment, we are faced with extreme volatility. You need to cut your position size down at least in half, if not a third or a fourth. You need to have the ability to sit through swings. You need to be able to recognize where your entry and exit levels are. And you just got to understand that when the VIX is above 17, this is what we have to deal with. So we're going to lead you through it. Don't worry, never fear, but let's look at the charts. All right, so switching over to the chart segment here, what I was talking about as far as a strong sector in this market is really how it's holding up relatively, but also on a technical basis. So if you look at XLP, which by the way is a place that hedge funds put their money when the overall market is kind of eating it. If you look at this here, XLP has experienced a little bit of a pullback the past 3 days. However, it's pulled directly back into the 100-period simple, which also overlaps with a fib cluster at 55.5. In addition to the fact that, like I said, it doesn't look like tech. So you can see, looking at tech, tech is obviously in an overall downtrend. That is not the case for staples. So what I want to do is I want to look for stocks within that sector that may have a cluster plus a squeeze. And what I came up with was Coca-Cola. So looking at Coca-Cola, you can see that you're in an overall uptrend. You made new highs about a week and a half ago. We have a squeeze. We also have a fib cluster that overlaps with a voodoo line. So that tells me this is a pretty significant area of support. If I zoom in a little bit farther, I can show you that the voodoo line, the level of symmetry, this pretty much overlaps in the same area with the 34 EMA, which is a pretty good area of support. Also, the squeeze is only 4 dots in, so keep in mind it could consolidate for a couple days more, but I do think that Coca-Cola is a buy off about the 48.40 level. If it falls a little bit further, then in that case you just look for a lower area of support that'll come in around $48. But at the end of the day, what you want to do is you want to watch for a trigger. So what do I watch for a trigger? Well, typically like a 15-minute moving average cross, which you can see came in right there. I also like the ready, aim, fire, buy signals, about a mid-level signal, which we have not gotten yet. The other sector that I discussed was healthcare. Now, healthcare has been the strongest sector on the year, especially in a week where we have given back most of our gains. I do think it's important to look at the strength in healthcare. So while it was down today with the rest of the market, overall, we're still in an uptrend. Yes, it is more of a violent uptrend than what we saw last year or even the first half of this year, but it's still in an uptrend. So I have a lower area of support in healthcare that comes in at about 89.07, and currently we're trading at 90.56. So that I got a cluster here that overlaps with the voodoo lines, a pretty strong area of support. So potentially, for example, if we traded lower on Monday, hit that area of support and then triggered higher, I would like to start looking at healthcare for some buys. If I was going to look in healthcare, where would I look? Well, the first place that leads me to is Johnson & Johnson. So looking at Johnson & Johnson, you can't deny that there is a fire line right here. We were able to pass through it a couple different times, but I think the squeeze can potentially get us through that level. So I have a Fibonacci cluster that comes in at 143.62 that overlaps with a 34 EMA as well as a voodoo line. So pretty significant area of support. So what I'm looking for on this is the same thing like I'm looking for in the other. I'm looking for a mid-level ready, aim, fire buy to tell me it's time to get into the trade. or I'm looking for a 30-minute moving average cross. Now you can see we've already crossed a couple times on Johnson & Johnson, so one could argue that, you know, it's time to get in already. If you look at the 30-minute chart, you can see that you haven't gotten exactly the green arrow, but it's very, very close. So it just kind of depends what kind of trader you are. I mean, would you rather just buy against support, or would you rather wait for a trigger? If you buy against support, you're going to have a better price. If you wait for a trigger, you're not going to have as good of a price. But at the same time, you know, you might have something that's a little bit more stable. So circling back and looking at the indexes, I mean, I think the main thing that's key about this week here is just the break of the fact that we're now down on the year. So if we look at where we were trading January 1st, we're now down on the year, which has happened a couple other times. But at the same time, I mean, the failure at this 618 was significant. This is a major resistance level right here. We failed here, 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 and here, and then again here. So the market has tried multiple times to go through 28.15, and it just has not happened. At this point, I do continue to look for 25.78 in the S&P futures. And, you know, we've crossed through resistance. So I can't even really say that I have a significant form of resistance. So keep in mind, we are in a downtrend. The path of least resistance is to the downside. There are going to be some honey badger trades as well as some strong sectors we can play to the long side. But for the most part, I am looking at this market to the downside. The difficult part about it here is just that, you know, you don't really want to be getting short when you're almost at your downside target. So what I'm going to look for next week is a slight lower trade that comes into areas of support. And then at that point, if we get an oversold buy, then that might be something that you can trade higher.
All right, so thank you so much to our Simpler Foundation, Fibonacci Queen, and Simpler Options members. For those of you who may be viewing this on YouTube, I just want to let you know that if you would like to join Simpler Foundation, go ahead and go to www.simplertrading.com/join/foundation, and you will receive this episode of Playbook every single week in your inbox. Thank you very much. We'll see you in the trading room, and good trading.